So today we're going to do a update on Evolution AB as they did report their Q2 earnings or their interim results. The stock is having a pretty good day. It is up 8% today, and today I'm going to give my updated thoughts on what is going on with this stock. Now, I did put on earlier on X about what stock you wanted me to do and have a look at. I did put this poll up, and as you can see, Evolution AB was the winner. Audio Boom, Mobico and Catebox were close behind it. What I'll try and do is I might do a video on one of these on Friday, and then I was going to do the new stock I've been buying. I'll probably do that on Sunday now if I have enough time. The ones that I don't cover on the YouTube, I will cover them on the Patreon. And obviously you can pay £3 to watch those videos, or you can sign up monthly for the Patreon and support the YouTube channel, and it's £6 a month. Or I think you can pay yearly and you get a 15% discount as well. So I'll try to do that all for you guys. I did see this comment down here about why not do 5 minutes on each. To be honest with you, the deep dive videos have been doing really well at the moment, so I'll probably keep that trend going. And why not do 2 today and 2 tomorrow? Trust me, I work a full-time job, and then I've got a 4-month-old at home, so to get all that done in one day isn't happening unless I stay up to like 2, 3 a.m. It's just not going to happen. So yeah, I have to just prioritize some videos on the YouTube and then get the rest done on the Patreon over the weekend. So if you do want to see that, like I said, it's on the Patreon, guys. So Evolution, yeah, really good jump in the share price today. We're going to take a look at the earnings. I've got to say, compared to where we were 3 months ago, the stock obviously had a big drop on the Q1 earnings, and we look today and the stock has pretty much recovered all of that, and we're about break even. And I got to say, like the fear that was out there last time when the Q1 earnings came out, I couldn't believe it. Like, I was frustrated with the last Q1 earnings. Yeah, they weren't good, but I couldn't believe like some of the posts that were out there. I saw on the Discord there was another video shared about another YouTuber, and he was like, "Oh, I'm fed up with this coming. I'm selling my shares in this," and I was like, "What?" Like, it's one bad quarter, guys. Like, don't get me wrong, I'm frustrated, but it's crazy sometimes the amount of people that let emotion dictate the feelings on the stock. Like, it wasn't good and it needs to be better, but we should be at a point where we're getting that emotional about it. In the stock market, you've got to be emotionless. You can't let emotion dictate your feeling on a business. And you got to remember, in business, like, there's going to be periods of time. You're going to have a 3-month period where things don't just go that well. That's part of the game. But there's going to be times where you have a 3-month period where things end up going better for you. And that's business. You're not going to have a 5 years where everything just goes absolutely amazing. There's going to be ups and downs during that time frame. But over the long term, if you execute more than likely better and better, that's when you do get rewarded. And I couldn't believe the amount of people that were, giving up on it. Yeah, there was some poor numbers in there, but let's not forget, the stock fell down to 12 times earnings. It was still growing 6% on an FX neutral basis. It was paying a 4.5% dividend yield. It still had an amazing balance sheet. It was still doing share buybacks. It was still having crazy amounts of profitability every year. And I couldn't believe the amount of people that were just like, what a load of rubbish. It's like, come on, guys. And now we've seen everyone, obviously before the rally today, trying to get back in. And even now, in that 2-month period, it's back up 30% in that time period. So yeah, just thought I'd make that point there because it just made me laugh looking at that over the last kind of couple of months while that's been going on. But obviously, let's get into these Evolution earnings. So this is the second quarter report. I'm going to compare it to the Q1 report as well here. So the actual, overall, what I'd say here is that the Q2 update was a step in the right direction. And that, in my opinion, is why the stock went up today, is because the market went, okay, things are getting better. There's still things that need to improve, and we'll take a look at them today on what still needs to improve. But for me, the market relaxed a little bit, and that's why investors were jumping in, because there was the green shoots appearing. There's some numbers in there that look a bit better now, and it was the market and investors kind of going, okay, things are turning around a little bit. I'm going to buy here. But like I said, there were still things that need to improve, and I'll also point them out. But I can see why the stock was up today. I thought the stock would be up somewhere between 5 to 10% today, and 8%, not too bad off where we did end up going up today. So when you look at the headline numbers don't look absolutely like brilliant. It's later on down where you can see why the numbers are a bit better. So if we look at Q2 here, compared to Q1, revenue was up 3.1% compared to Q1, which was 3.9%. So a slight slowdown there. If you do look at the EBITDA margin of 65.9%, in Q1, 65.6%, so same again, slight EPS there, Earnings per share 1.24 in Q1, and now we're at 1.22. So you look at those numbers there, like some slight improvement, some decreasing. So when you look at the headline numbers, yeah, you would look at that and go, they're not really that much stepping in the direction, but it's when you get further in that you start seeing the headlines. So when we look at the CEO comments here, revenue growth on a constant currency, FX neutral basis is estimated to be 8.8%. If you look at Q1's growth on an FX neutral basis, 6.1%. So yeah, they did get hit by an FX impact, which we've seen quite a bit at the moment. Some companies, the movements have been going in the favour. Some, it's not been going in the favour. But when we look on a neutral basis, the revenue did accelerate a pretty good margin as well. And on an FX neutral basis at 8.8%, that's pretty good, especially when you consider the stock fell to a 12 times earnings business. So when we look at an FX neutral basis, okay, the numbers are actually, moving up in the right direction. That was the first sign that, okay, the numbers are stepping up in a good direction here. In the first quarter, Evolution reported a deceleration of growth rate year on year, mainly due to proactive and conscious actions that permitted us to stay ahead of the curve in regulatory landscape. So that was one of the issues why the stock did drop previously. The second quarter is more in line with our expectations given the challenges we face in Asia. So they're saying, look, we did step in the right direction and we're a bit more happy with this. The proactive measures we are taking regarding ring fencing in Europe, to be clear though, we are not satisfied with this quarter's growth. We are working hard to increase the pace. So they said, look, things are getting a bit better. We're still not happy with it, but things are getting better. And that's, the CEO, for me there, is being really honest, because that's my feelings as well around this quarter. It was better, but there's still work to do. So once again, they talked about as well the hijacking of their video streams in Asia. That is one big problem as well. Why the stock had previously a pretty significant drop is because of the hijacking of the Asian market, which is their biggest area at the moment. But one thing they did do is they did maintain their guidance for the full year guidance, and that the second half they believe is going to be stronger. I always get nervous when companies are saying that the second half is going to be better, but we got what I was hoping for, which is you could see in Q2 that there was the steps starting to go in the right direction. So when you start looking at the segments here, Europe, so the one thing that was still concerning and probably actually was a negative in this quarter is that Europe is actually getting weaker. So we know what they're trying to do is they're trying to put a bit of regulation in. This is just to stay ahead of potential regulation that comes in forward. They get it in place now. But you can see here that we saw a slowdown from 201 million down to 189 million. And once again, we saw that contract again to 180 million. So this is currently showing no signs of that much improvement going on at the moment, which is probably one of the negatives that was in this report. You can see here though, Asia, this was the key thing. This is what, in my opinion, why the stock rallied a bit today. Asia, their biggest part of the business, what we've seen previously is 200 million, 202 million, 202 million, and then a reduction to 201 million. We saw the growth again, 209 million. And that's why the market, in my opinion, today is acting positively to this report, and is probably the biggest bonus in this report is that, okay, it seems like the big issue that they've had at the moment, which is the cyber attacks, it looks like they've started to get it under control a little bit, where that's actually returned to growth. Now, ideally, we would like to see this continue, where it's not only just short of double-digit growth. We want to see this improving to a 15-20% growth again. But the key thing to point out is that this took a step in the right direction. North America as well still remains strong in what was previously a bit of a bad quarter for North America as well in the last period. 60 million, 64 million, 70 million, and then we pretty flat, had a bit of a flat line from 70 to 71 million. We saw once again an increase in the North America business, which is great. So that's another bonus here. We saw another part of the area step up in the right direction. If we look at Latin America, 36, 37, 38, decreased to 36, back up to 37. So once again, Latin America came in back in growth mode, which was great. And if you look at other, 19, 20, 20, 21, 23. So we saw other as well having a pretty significant increase. So this is why the market really liked this report, and this is why I like the report as well today, is that we had a lot of the areas showing improvements again. Asia went back to good amounts, not good amounts of growth, but a step in the right direction. North America stepped in the direction. Latin America stepped in the right direction. Other steps in the right direction. So the only little concern, so we want to see these continually improving. Like they're not like the CEO said, they're not where we want them to be, but they're moving up in the right direction. The only other issue that does still stand at the moment is Europe is still not great. But apart from that, this is why the market liked it. This is why I liked it. We're stepping in the right direction. That's really the key thing. So overall, when you look at these results today, this is why the market is up. There's a lot of areas going back into the right direction. But as well as that, when we look at the FX neutral basis, if it wasn't for that, the numbers would have looked even better. So yeah, pretty decent report from Evolution. Still needs work, but step in the right direction. Now, ultimately, the thing is like I said, you got to look at the valuation here. 14 times earnings, it's not bad. And especially when you look at, okay, if they continue increasing in the right direction, yeah, this year might be a little bit of a write-off when you look at the numbers. But if the numbers trend up in the right direction, where we look at the guidance, Q3 continues to improve, Q4 improves, and then we get back to some normality in 2026, and we do go back to that 10% growth year. EPS starts going up in the right direction as well. If we do start seeing these numbers get stronger and stronger back up to these sort of levels, well, that's when you look at 14 times earnings, you go, okay, that's where it gets exciting for this sort of business. If they do execute on this valuation and this growth at this level, this is where you get your good return from. And the other thing you got to keep remembering with Evolution is that it's still a very highly profitable business. It's still got a fantastic balance sheet here. The management team on the conference call, I didn't really take too much away from the conference call that was like new information. But as the management said, is that, and you can see from the insider buying that's been going on, they are quietly confident about, the numbers stepping up in the right direction now. And that seems to be the case when we do look at it. The other thing as well is, because of the high profit, we are getting, the benefit of a decent dividend. We do have a pretty aggressive share buyback program on 346 million, which when we do look at Evolution, that 169 billion market cap isn't correct because that's in the Swedish currency. If we put that in from the Swedish krona into US dollars, it's about 15 billion market cap. So a 346 million buyback is a nice chunk there that's also going to just top us up. And that's the thing as well, you're going to get a nice dividend from this one. A few weeks ago, you could have got a 4.5% dividend yield if you were buying. And, because it's so profitable and the share buybacks, it's a nice return from shareholders. So if we do have a look at the numbers here, I've got revenue growth of 5, 7, 10% growth and profit margins of 55, 56 and 57% profit margins. 20 times earnings, market average. I think that would be about fair if the company gets back to these levels of growth. And on the low side, it's not often that you see that much upside on the low side. 85% on the low side. On the high side, we're up to 130% if they do execute on a bit more of an expanded profit margin, 10% revenue growth. And yeah, it looks good. So that's what I like. When you look at the low numbers and they still have good upside, that's what I like. And then obviously the high side would be great if they execute there. Another thing to factor in, like I said, is you do get that dividend as well. So, 3.5%. You times that by, 5 years, over a 15% dividend yield on top. So with that 15% dividend yield on top, even the low side showing up 100% return. And then on the high side, you're up to 145%. That's not factoring in any increases in the dividend. That's not factoring in any share buybacks in. What would be the ultimate cherry on the cake here is that, if they do get back to these 10% revenue growth numbers here, profit margins expand slightly. If the market goes, you know what, we're going to put you up to a bit more of a premium instead of 20 times earnings. Let's say the market goes, let's put you up at 25 times earnings. That upside really does, you get into 188% upside there. You had a 15% dividend on top, 200% upside. So that's where it gets really exciting. Now, I'm not going to assume that. I always say to you guys, I don't like assuming, frothy valuations or metric expansion. So when I look at the numbers just as it is, that's good upside to me. And if they do, really execute and they get this growth back and the market goes, hey, we really like you again, we give you the metric expansion, then, you are talking about where you went to the 2-bagger, maybe even the 3-bagger territory. But I'm not going to assume that. But yeah, even on these kind of more conservative numbers, it looks good. And I think we just had a case where a few months ago, yeah, you know what, I was frustrated on the last update. I was annoyed, but I can't believe the amount of emotion that was out there after the Q1 update where I saw a lot of people kind of giving up on the stock and selling out of it. come on, guys, there's more to holding a business for the long term than one quarter. If we you're gonna have plenty of these, when you're investing, you're gonna have a couple of quarters where you own a business and you go, that could have been a little bit better. And you got to zoom out sometimes and think about the TAM that they're in, the potential growth, and realize that is this something that could be maintained on the long term where it is concerning, or you've got to look at it from a long term of, okay, this is a blip, can they resolve the issue? And today was an update for Evolution where it looks like they're resolving the issues, as I showed you when we started breaking down the geographies there. And that's what you got to do. In the investing game, you got to take emotion out of it. You got to be emotionless and actually look at it from a financial point of view and go, okay, is there actually something here where it's time to panic, or is this just a blip? And I think the last quarter, what we could see was a blip, and let's give them time to see if they resolve these issues. But so many people straight away, panicked, and that's why you've got to look at it from an actual number point of view and not react because the share price moved. Always look at it from an actual number point of view, and that is what will help you make the better decisions in this game rather than an emotional decision. So yeah, that's a review of Evolution, guys. Hopefully I'll see you tomorrow on a video as well, and then I'll try do my new stock on Sunday for you guys that have been buying. Whichever one I do cover on YouTube, the ones that I don't cover, I'll cover that on the Patreon as well, for you guys as well. So maybe give it a go for a month and then date £6. So price of a coffee. So you can't go wrong there. Anyway, thanks for watching, guys. See you in a bit.